Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, September 23rd, 2020, and we again find ourselves in the final hour of the trading day. I prefer to make the majority of my buying and selling decisions at the end of the day, in the last hour, particularly in the last few minutes. At the end of the day, the large financial institutions take control of the price away from the day traders and the algorithms. They're dealing with the most money. They have very smart people, best technology. I consider them to be smart money, and I believe there is an edge in following what the large financial institutions do at the end of the day. Wow, what a day. What a day. Well, first of all, thank you all for coming. I appreciate you coming here, spending your time, investing your time. I hope that it's helping you with your trading and your investing, and I always look forward to seeing everyone. So thank you for coming. Well, the Dow is down 466 points, down 1.71%. The NASDAQ is down 296 points, down 2.7%, and the S&P is down 67, down just over 2%. So the NASDAQ is getting the brunt of it today. Wow, what a day. What a day. All right, listen, here is the plan for today. First of all, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at my current positions, as painful as that is going to be, and talk about when I bought them, why I bought them, and how I'm going to manage them moving forward. After that, I have had some good day trades today, so I will be sharing those with you. After that, we're going to go ahead and take a look at the board and take a look at your positions. As painful as that's going to be, but that's what we're going to do, and we're going to see how those are working out. After that, we are going to talk a little bit about trader psychology, talk about the importance of it. It's the greatest skill you can ever learn in trading. It doesn't matter what kind of trading approach you have, doesn't matter how good your trading approach is. If you cannot follow it, it's worthless. So the only way to be a long-term profitable trader is really to follow your plan. The plan doesn't have to be the best plan. It can be fairly simple. That's okay. But what you do have to do is you have to follow it. That is a must. After that, we're going to go down through my watch list, going to go down through the results of Kamal's scanner, see if anything qualifies at the end of the day for a new trade. I have 3 requirements whenever I'm looking to enter a new trade. First requirement, have to look for a confluence or combination of indicators lining up, ideally on multiple time frames. Number 2, even if I have a good setup, I need to make sure that I have a good risk to reward. And number 3, and today is a day that really points this out to us, not having too many correlated positions. It's always important to have some diversified positions in different industries and even outside of equities, such as gold, bonds, silver, oil, something like that, so that you have as much diversification as possible. I like to have diversification in my positions, and I like to have diversification in my trading approaches. So we'll go down through the watch list. If anything looks good at the end of the day, I will take the position. After the market closes, if you have any questions for me, please let me know. I'm happy to answer them. If you have any stock symbols that you'd like me to look at during the podcast, please put them in the chat, and I'll do my very best to get to them before the end of the day. Just put an emoji by it so I know it's time sensitive. And then lastly, if anybody has any new entries or exits today at the close of the market or after the close of the market, please let me know. But please wait till the end of the day so I'm done teaching and trading and the pressure is off. All right, so that's the plan. I'm going to run that U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here, and here. Thank you so much. All right, let's take a look who is here. Evan is here. Good afternoon, Evan. Good to see you. Quad Racer, good afternoon, Greg and group. Happy Wednesday. Happy Wednesday to you, Quad. Miko is here. Hi, Greg and everyone. Hello, Miko. Good to see you. Gary M is also here. Hello, Greg and group. Hello, Dan says salutations. Kamal says, hey, Greg and gang. Hello, Kamal. Good to see you, bud. David is here. Hi, Greg and group. Hope you're doing well, David. Tracy is here. Hey, Tracy. Good to see you. Hope you're having a good day. If Paxton's with you, please give him my best. Brian says, hey, everyone. Greg, I had a day trade on SPI. I dipped my toe in and got in and out quick during the open, but take a look at what would have happened if I would have stayed in now. All right. I have a feeling this is not going to be good. Oh my. Are you kidding me? Up 2,200%. That's the biggest move I think I've ever seen in my life. Holy smokes, Brian. Oh gosh, darn it. That would have been sweet, huh? Man, sorry. I hope at the very least when you got in and got out it was profitable. Holy smokes. Unbelievable. Glenn says, hey Greg, looks like we are repeating March fall, but at half the speed. Yeah, it's pretty brutal. It is pretty brutal today. Rami is here. Hello, Rami. Good to see you. Thank you for coming. Hello, Greg and group. Hello, Rami. Frank says, to celebrate my son Dave and my birthday today, I have written a virtual magic trick poem. Okay, well, happy birthday to your son and to you. So you're on the same day. That's great. That's great. Wow, what a day. You know, I mentioned this a minute ago, but today is a perfect example why you do not want to have too many correlated positions. You know I say it all the time, but I really do mean it. I really do mean it. You get a day like today and it just can be devastating, right? It can just be devastating. All right, well, let's get to it. Gary, Quad, Steven, Glenn, Johan, Andrea, and myself, we did take Alibaba yesterday. We had a valid setup. We had a 520 crossover in the value zone. It is down today, not down too much. I mean, it's down over 1%, but considering it's hanging in there pretty well, looks like the 5 is going to cross under the 20. In this case, I would get out of all of my position. I'll get out a half position if the price closes below both moving averages, but in this case, the price is closing below both moving averages and the 5 crossed back under the 20. So this one feels a bit like a win today since it's only down 1%. So, you know, that's the key, right? Get into your positions, take a valid position. This was a valid position. And then get out quickly if you're wrong and let that baby go if you're right. So this is the proper way to trade. Even losing trades, they're proper trades, but you have to get out of them. So I will be getting out of this today, unless we have a big reversal at the end of the day. That'd be nice, but who knows? Excuse me. So I will be getting out of this today with a small loss with a 520 crossover. SPY, well, bright spot. I do buy the SPY every day at the close. I hold it overnight. I sell it first thing the next morning. Why do I do this? This is based upon a long-term back-tested study from Liz Ann Saunders at Bespoke Invest. Since 1993, they tested 2 approaches. Buy the SPY at the open, hold it through the day, and sell at the close. If you use this approach every day, you would return a negative 13.9% return. If you do the opposite, this is the one that I use, buy the SPY at the close, hold it overnight, take the overnight risk, sell first thing the next morning, up positive 634.2%. So big difference between you buy and when you sell. Past performance is no guarantee of future results. It may never work again in the future, but if I'm going to allocate money towards something, it's going to be towards something that has good back-tested results. Blue line, buy the close, sell the next morning. Orange line, buy the morning, sell the end of the day. You can see there's a huge difference in when you buy and when you sell. The blue line, buy the close, sell the next morning. Over time, all it's done is gone up, but there are significant drawdowns. So if you are going to use this approach, do it with a very conservative position size, like maybe 5% position size. If you want to be more aggressive, like a 10% position size. So that being said, I did buy the SPY yesterday at the close at 330.30. Sold it for a little profit this morning at 330.92. So about 60 cents overnight. But you know, the big victory here is selling it right at the open before the big crash, right? So anyway, grateful for that on a day like today, and I will be buying this again at the end of the day. Zanga, unbelievable. It's up today. Gary, Yas, Quad, and myself are in Zanga. We bought it back here on the 17th of September at 836. False breakout to the downside with a V1 plus an under 30 over 30. It's been a nice move up. I did hit one profit target today in the morning. Currently, this trade is up 4.68%, which is pretty good. It did reject the 50-day moving average, or I'm sorry, it rejected the 50 RSI today when it was at its high. Now it's come back. Because that has happened, unless it closes over 50 today, I will take half of my position off and lock in half of the profits today. But, you know, very grateful that this happened. Glad I got the profit target. And it's 48.41, so there's a possibility it could close back over 50, and if it does, I will keep it. All right, Amazon. Well, how things change. I did sell puts on Amazon down to 2,300, expiring November 20th. If Amazon holds above 2,300 by November 20th, I will be able to keep all the premium that I received for selling the put. The reason I picked the 2,300 strike price was on the daily. It has the 200-day above it as support, right at the 250-day, would also acts as some support. On the weekly, I have the 50-week moving average as support at the 2,300 mark, and on the monthly, I have the support of the 1 ATR and the 20-month moving average. So doesn't mean it's going to hold there, but when I sell puts, I like to have support on 3 different time frames. I'm still up on this trade, which is pretty amazing because we had such a big day up yesterday. Anyway, so far so good. Although big down today, but it was up 160 points or something yesterday, so that's why I'm still up on the trade. Intel. All right, Intel. I did sell puts on Intel down to $45. I used the quarterly. The quarterly chart has the right there at the 20 quarter EMA at $45. Monthly has the 50 month moving average as support, and on the weekly it has the 200 week moving average. I've been up on this trade ever since I sold it. However, today, when my profit and loss on that selling those puts got back to even, I just went ahead and took it off. It was concerning me a little bit. As long as my puts are in the money, I'm good with them, right? Just like a directional trade. But once they start going out of the money, it concerns me. So when it got back to break even, I just went ahead, closed the position for a break-even trade, no harm, no foul. So I did cover my puts on Intel, which is good because it would have been down further than now. All right, Apple. I also have puts on Apple. I sold Apple puts at 77.50 on the daily. We have the 200, the 250-day moving average as support. On the weekly, sorry, I know this looks cluttery because I had a lot of trades. On the weekly, I have the 50-week moving average above as support, and on the monthly, I have the 1 ATR channel and the 20-month moving average. These are still in the money, so as long as they're in the money, I am good with it. All right, I think those are all my positions. Let me show you a couple trades I had here. day trades. Okay, I did buy Apple today on the 5-minute. We went under 30, over 30, bounced off the 200-day. I bought it here at 109.29. Moved up right away for me, nicely. This bar here went above 50 RSI and closed below, so I took half my profits. The next bar closed below the low of the previous day's bar. I took the other half. So I got in at 109.29, got out a half at 109.71, and got out a half at 110.03. So that was the good trade on Apple. All right. Second trade on Apple was here. We went under 30, over 30, had a V1, bounced off the negative 30 ATR channel. I got in at 108.66. My stop was a close below 30 because that's the reason I took the trade, the under 30, over 30. Got in at 108.66. The next bar just dumped on me and I had to get out at the close of the bar when it closed back under 30. So this was a loss. I got in at 108.66 and I got out of at 107.96 for a loss. Okay. And also Frank, since I'm here and I always forget this, Frank did buy Apple at an average price of 113. Right now it is 107.70. So that one is a bit down on the day and obviously on the trade as well. Okay. Okay, next trade. I did short Twitter right here, a 5-minute bar. We went above 70 and below 70. We had a V1 to the downside and a false breakout to the downside. I shorted here at 46.34. Moved sideways, didn't do much. Then we had a big down bar. The next down bar went under 50, over 50 RSI. So I covered half my position to the short side at 46.06. Next bar closed above the previous day's high. I got out at 46.22. So I shorted at 46.34. I covered half at 46.22, and I covered half at 46.06. And speaking of Twitter, everybody, Brian, Johan, David, and Yas did buy Twitter back on the 18th at 40.16. What a trade. I knew I liked this trade. I didn't take it because I didn't want too many correlated positions, but what a move, especially on a day like today. This is up 13.52%. So congratulations to Brian, Johan, David, and Yas. All right, next trade. I did buy AGQ intraday. Here we had a double bottom, no red MACD bars. I bought the V2 intraday at 40, intrabar at 41.19. Immediately went up, got up to my 1 ATR trailing stop point. On this bar, it went above 50 RSI and below 50 RSI. So I entered at 41.19. I sold half at 41.56. And because we moved 1.5 entries, 1.5 ATRs for my entry, I went into trailing stop mode. Worst thing that can happen in trailing stop mode is it gets back to my break even, which it did here. So still a profitable trade because I took half of the position off up here. So really glad I did that because it went really down from there. And then last trade, Exxon. I did buy Exxon here with this V1 right here at 34.95. moved up nicely, got to my 1.5 ATR level, then lost the 50-day moving average. So I took half of my position here. And again, when it gets to 1.5 ATRs from my entry, worst I can do is break even what I have left, and that bar happened here. So, good example of two different trades where I took an entry, sold half for a profit, sold the rest when it got back to break even. And obviously I'm glad I got out when I did, because then it just had a big dump. So anyway, all good trades today, except for Apple, but I will take it. Okay, let's take a look here. Miko says happy birthday. Gary says happy birthday. Kamal says happy birthday. I say happy birthday. Steve Burns is here. Good to see you, my friend. Always an honor and a privilege to have you here, Steve. I really mean that. I always feel blessed to have you in the live chat with us, and I know everyone else does. Steve says the market is getting more dangerous. Over 90% of all my moving average signals currently are in bearish cross unders. Yes. Yeah, not so hot tamale, as we say, right? David says, happy birthday, Frank, for you and your son. I agree. Hey, here's the poem for Frank. Let me get this. Hocus pocus, keep your focus. Where a stock goes, you can never tell. Sorry, there is no magic spell. So follow your rules and discipline, and presto, your gains will excel. Very nice. Very good magic birthday poem. Let's give it one more time. Hocus pocus, keep your focus. Where a stock goes, you can never tell. So, sorry, there is no magic spell. So follow your rules and discipline, and presto, your gains will excel. It's all about following your rules, everybody. It's all about getting out quickly when you're wrong, identifying strong support if you're long underneath you, identifying strong support, taking that trade, pulling the handle on that slot machine. If you're wrong, get out quickly. If you're right, have the guts to hold it and have some kind of plan to the upside. But thank you, Frank, and happy birthday to you and your son. Steve says the market is getting more. Steve says, Greg, I thought about you today when I wrote my Theta Gang blog post with the wheel strategy. Oh, interesting. I'm not sure I know what that is, though. But thanks for thinking about me. I'll have to read that post. So the Theta Gang blog post. Theta is time decay in options. Dan says, thanks, Steve. We'll take heed. Steve says, Holly will be preparing the first draft of my second edition of the Moving Averages 101 book, my favorite book. I will email it to you this week. Thanks for writing the foreword. Oh, that's right. We talked about that. Okay. Well, maybe we can chat about that just so I have an idea of what you'd like, as a forward. Frank says, I can't remember when September-October period wasn't rough. Steve Burns says, AGQ chart has been destroyed. Yes, that is so true, Frank. I have so many memories of September and fourth quarter market down. Tracy said, I finally sold all my Apple. Basically, I bought it before the split. Worked out to be 78 per share. Made a good penny. Thanks to you, Greg. Good, and I'm glad you got out of your. Tesla when we talked about that. Steven says, moving averages can keep you safe in the market. Johan, hi Greg and everyone. Happy birthday to Frank and to Dave. Yes. Good to see you, Johan. David says, I got out of Twitter yesterday. Yeah, I know. Oh. Did I not take David off? Okay. Well, anyway, still a pretty nice trade, and congratulations to Brian, Johan, and Yas for another 6%er today. Okay. Let's move on then. Let me take a look here. Okay. Netflix. Glenn did buy Netflix at $487.30. It's 471.04, down 4% today. So down on the trade and down on the day. Google, David, Steve, and Gary bought Google on the 21st at 1421.86. It is now 1407.62. So it is down today and looks like it was nicely positive yesterday, but it is down right there at the 200-day moving average again, but down on the day and down on the trade so far. PD, Kamal bought PD 24.90. Has moved up nicely. It is down a bit today, but still nicely up on the trade. Frank bought TOL yesterday at 46.97. Moved up nicely, was up a little bit today, came back down. So it looks like Frank is right back at about break even. VWM, Kamal and Johan bought VWM at 142.70. It is down 2.05% today. So down on the trade and down on the day. PayPal, Brian and Glenn approximately bought PayPal at 183.40. It is now 181.55. So down on the day, down on the trade. JD, Evan and Kamal bought JD a couple days ago at 75.20. Was up nicely today, but with the rest of the market, it is down 0.5% today and down on the trade. So, thank goodness for Twitter. That's all I can say. FCFS, oh boy. First Cash, Bob bought First Cash. This was quite a long time ago. He bought it at 58.10. It is now 56.20. It was positive for a lot of the move. I don't know if Bob still has it, but down today, which makes it negative on the trade and negative on the day. GDXJ, Yas bought GDXJ at 58.35. Had a nice initial move, but really down deep now, down 8% today. Twitter, we talked about that. Brian, Johan, and Yas, well off of its high, but amazing that Twitter is bucking the trend today so strongly. Congratulations, Brian, Johan, and Yas. That was a fantastic trade. Carol, I don't know. I haven't seen Carol for a bit, so I'm not 100% sure she's still in this, but this is a good example of a double bottom with the bullish divergence, V1 trigger back in the value zone, and I don't know if Carol still has it, but it has moved up nicely from her entry, although it is down today. Las Vegas, Gary bought Las Vegas, November 20th, $50 strike calls, meaning that by November 20th, it needs to be above $50 to have intrinsic value. It is now 45.31, so that one is down. LVGO, Frank bought LVGO yesterday at 132.50. It is at 133.66. It is down 3.25%, but he is still positive on the trade. So let's give credit where credit is due. Bob bought SHLL at 46.68. We are now 45.50. It is down 5.52% today. So down on the day, down on the trade. BMRN, Kamal bought BMRN at 75.58. It is 78.85. It is down a bit today, down 0.64%, but still nicely up on the trade. So congratulations, Kamal. Steve bought IBB with the 530 EMA crossover at 136.64. It is currently 132.37, down 1.10%. Here's the 530. Looks like the 5 is 133.56, and the so it looks like the 5 is still above the 30. So if there's any change there, Steve, let me know, but it looks like the 5 is still holding. DKNG, Frank bought DKNG yesterday at 52.30. It is down 6% today. Gosh darn, down 3.23. So down on the day, down on the trade. And EA, Brian bought EA yesterday at 129.37. It is now 128.56. So it is down on the day and down on the trade. So it looks about like the only thing that has been up today at all is Twitter for Brian, Johan, and Yas, and ZNGA, which is Gary, Yas, Quad, and myself. So again, I did get out of the Intel puts at break even, so I'm just going to put those over here because I know Gary still has them. All right. Steve says, amazingly, VIX was rejected again today at the 200-day moving average. That's right there. It's holding right there. 29.21, it is 29.20. So yes, it is rejected it by a penny, at least right now. Gary says, interestingly enough, I sold Google for a small gain earlier today and then sold a credit spread for November 20th, 1200 strike price puts. Thanks for your help on that, Greg. You are welcome. You know, I do like doing puts or credit spreads, especially when the market gets super volatile like this, where it's not trending, it's not doing anything. You know, the way I look at it is, okay, you know, in the short term here, I don't know what's going to happen, but I feel a little bit more confident, although not certainly for sure, that there are going to be some buyers at lower levels. And so in a market like this, I tend to shift towards selling puts or credit spreads with lots of protection to the downside, with the assumption that at some point there'll be some buyers down there. And if not, you know, I'm okay buying a stock 20 or 30% lower, like Amazon and so forth. So, you know, yesterday I forgot to do the trader psychology section. I can't believe I spaced it out, but today I'm not going to. So let's switch gears, get away from charts. Let's get into the mind a little bit. Again, I repeat this every day, but in order to be a long-term profitable trader, you're going to have to develop a plan. The plan doesn't have to be the most sophisticated. It can be very, very simple. There's a lot of latitude in the type of plan you have, but what there is no latitude in is following that plan. The only way that you are going to be profitable in the long run is if you follow that plan, whatever your plan is, at least as long as it's a decent plan. And that all comes down to psychology, dealing with fear, dealing with greed. You know, those are the two main forces. You know, I want more money and, oh, it's down, but I think it'll come back. Get yourself a plan. Plan your trade your plan. I'm sure you've heard that before. So that's why I like to talk about trader psychology. This is from Thomas Payne at Trader T Payne over on Twitter. Thomas was a scientist. He changed careers and became a trader. And what I love about Thomas is he spends a lot of time getting into the nitty gritty and the nuances of trader psychology and how important it is. And he definitely does. That's why his posts are mainly about trader psychology. Let's see what Thomas has to say here. Millions of people compete against each other in the financial markets, but your most challenging enemy will always be yourself. That is how powerful you are. Your future literally depends on you. Isn't that good? Millions of people compete against each other in the financial markets. And that's really what's happening. Just, you know, imagine it's a poker game and there's millions of people and everybody's playing the same game. We are all competing against each other. All the money we make comes from somebody's pocket. All the money someone else makes comes from our pocket. So it seems like a daunting task that you would be competing against millions of people. But in reality, everyone, your most challenging enemy will always be yourself. You are a more challenging enemy to your success than all the million people out there. That is how powerful you are. Your future literally depends on you. Well, that's kind of a big statement, right? But it's true. And how does this dovetail back into what I'm talking about? Essentially, create a good plan. Create a decent plan with good trading principles. Getting out quickly if you're wrong. having potential large wins, having potential small wins, break even trades. You need to create a plan that allows you to have one of these four outcomes. But following that plan, and using strong resistance support underneath you if you're long, that's the key. Getting out quickly, letting it go if you're correct. But doesn't matter. I could write you up the best trading plan in the world, but if you can't follow it, it doesn't matter. It doesn't make a difference. You're going to fail. So that's why Thomas is saying that's how powerful you are. The future literally depends on you. It depends on you following a well-rounded trading plan. So this is such a good post, and thank you, Thomas Payne. And please subscribe to Thomas over at @TraderTPayne on Twitter. He has just lots of good gems every day that you can read. And so I really, really love this post. Thanks a lot, Thomas. And I hope that was helpful for everyone. Beta Pup, SBI has been crazy. Halted again. Halted going up, by the way. Yeah. Beta Pup, who was it? It was just a minute ago. Somebody told me about that. It was Brian that had bought it and then sold it. My goodness, I don't know what's going on with that stock, but up 2,200%. My gosh, can you imagine if you sold naked calls on that? You'd be wiped out. That, unfortunately, there are people that have been wiped out today on that stock, like wiped out. So always position size correctly, quantify your risk, tell yourself how much you can lose, and like Thomas just told us, stick to that plan, right? Stick to that plan, everybody. When the market's going up, August was just go up, 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 up. No worries in the world, just go up. But like I've said many times, the market can change on a dime. And September 1st was the last day it went up. I remember that's the day that Katie died. And ever since then, man, it has just gone down like crazy. The psychology is different. People's emotions have been wounded. There's fear that's come back in the market, and that's going to change a lot how things react. To get into a trend, everybody has to feel pretty good about stuff. And now we have up and we have down, we have up and we have down. So sometimes you do have to change your trading approaches depending on what the market is doing. And always, 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 everybody, please, please, please adjust for volatility. If we look at Apple right now, the volatility for the 2 ATR is 11.96. If we go back to when things were just cranking up here, it was 7.13. So, and I think probably back even here, it was probably even less. Here it was 4.74. So if you're trading 100 shares here, it's the same as trading almost 300 shares here. So you have to adjust with the volatility. I hope that makes sense. But you can't use the same position size every single time, because it might be like having 2 or 3 times your normal position size if volatility is increased 2 or 3 times. Okay, well, let's take a look at some potentials here. AGQ. So, there is a good confluence, and the confluence is when you're under 30, over 30, at the same time you've gone under the 100 and over the 100. It doesn't happen very often, but it is a good confluence. Currently right here though, AGQ is down 14.91%. Super, super scary. But if we close above the 30 RSI and if we close above the 100-day moving average, I will take a position. Now, it's double leverage, but I take my maximum allowed risk. I divide it by the 2 ATR. The 2 ATR is huge here, probably double than what it was over here. So just because it's such a volatile stock, I'm still position sizing so that, if I have a loss, it's still my maximum loss. And that's the nice thing about the 2 ATR. It figures all that in. But right now it's 29.57. If it closed above both the 100 and closed above the 30, I would take a position, with my stop being a close under the 30 and a close underneath the 100. Bill.com. Well, Bill's doing pretty good today, up 1.84%. That's nice. 1.43 million shares traded. It looks like it's close to a 520 crossover. I don't know if this back test well on Bill. I have a feeling on etfreplay.com it will not have a stock as small as Bill.com, but you know, I mean, it's okay. We're over the 50-day moving average. We're over the 50 RSI. MACD has turned positive. It's up on a down day. So, you know, it's pretty good. I mean, we're in the value zone on the weekly, which is good. Probably the monthly is in an uptrend. Yes, monthly's in an uptrend. Weekly's back in the value zone. Daily going up. That's a triple screen type of approach, but I don't know Bill.com well enough, and I don't see a completely legitimate buy signal here other than possibly the 520 crossover, and it has not crossed over anyway. So disregard that. The 5 has not crossed over the 20. You know, it's gone under 50, over 50, under the 50-day moving average, over the 50-day moving average. You know, that's good. You know, that's good, but I don't think it's enough for me. SAFT. Not enough shares traded, only 46,000. So I'm going to take that off the list because of that. GARS. 83,000 shares. Not enough. SKX. Skechers already rejected the 200-day, so that's not interesting. PLNT, 1.77 million shares traded, so that's good. That's Planet Fitness. I don't see a entry signal here. HCHC, working on a double bottom with the bullish divergence. If we could get back down, test this low with the double bottom with the MACD bullish divergence, I would be interested, but it's not there yet. Work is up a smidge today. Slack Technologies. Looks like we had a close under the 250 and over the 250. I don't know if that back test will, but you know, in a down market like this, I would rather approach like the very, very, very best stocks, because the best stocks in the world are on sale right now. Levi Strauss. No, that looks range bound to me. Costco has a 520 crossover. Oh, it has earnings tomorrow though. That's why I didn't already check it. It has earnings tomorrow. So, you know, the 520, I'm not sure if that back tests well on Costco or not, but it is up today. So relative strength is good, but it has earnings tomorrow. So not going to take that. EXAS. It's a V2. Did we already reject the 50 RSI though? That's the key. No, we didn't, but it's well off of its highs. It did have a double bottom with the bullish divergence here. I think what I'm going to do, I like this actually, but what I'd rather see it do is go up or then come back down and get a higher low V1 or V2 entry instead of buying this lower low. You know, see, this is lower than over here. It is a double bottom with the bullish divergence, which is good. I'm not surprised it bounced, but you know, buying those lower lows, you play for the bounce. Buying a higher low, you can play for a trend. And Momo, I don't know what Momo does. Under the 30 RSI, double bottom, but no divergence. So the only one that actually looks interesting to me at all, Bill, I don't know enough about. AGQ, I will be watching this, but again, it's going to have to close over the 30 and back over the 200, which doesn't look like that's possible right now. Let me take a look at current positions here. Alibaba, 274.25, 274.48. So most likely I'm going to be taking a small loss here on Alibaba. SPY, of course, I'm buying that at the end of the day. Zynga, I am selling half of Zynga with the rejection of the 50-day moving average, but this has been a good trade, especially in this crazy kind of market. Amazon, I am still in the money on Amazon on the puts, so that's a keeper. Still in the money on Apple on the puts, but you see we've pulled back away from the 50-day moving average now. That's, that's not a good sign. Twitter doing great for Johan, Brian, and Yas, still holding the 70 RSI. Beta Pup wants to look at WPM. WPM. Wheaton Precious Metals. Well, similar to kind of the silver chart, we have lost the 100-day. We have not tested the 30 RSI. So, the way that I would look at this, I would much rather see this at least go under 30 and over 30. But no, I would not be interested. I would not be interested on that. David said Nike doing very well after earnings. Yeah, can you imagine? Can you imagine how much the Dow would be down if Nike wasn't up 8.2%? I mean, right now the Dow is down 516 points. Holy camole. NASDAQ's down 307. You could probably add on another 60 points or something if Nike wasn't up 8%. This is brutal. This is brutal times here. Take a look at Google here. Well, Google it's right at the 200-day moving average. David, Steve, and Gary still have this trade. I think probably their stop is a close under the 200-day moving average. But if it does close under the 200, then a close back over the 200 would be a good entry point, and I hope that holds above for David, Steve, and Gary. Let's look over at the Qs. Yeah, look, this happens very often. You lose the 50-day moving average, you come back up to test the 50, and if it doesn't work, then it pulls back away, and that's exactly what happened. We lost the 50, we came back up to test it. Now that 50 is pretty significant resistance above us, and it's pulling away, and the more it pulls away to the downside, the worse it is. And so there's no buyers here. Where are the buyers going to be? Well, they may be at the 30 RSI, they may be at the 200-day moving average. So that's how it works. If one level is not holding, then something below will be another test. If it holds, great, it will move back up. But if it doesn't hold, it's going to keep going lower until it finds a level. And the level that I would be looking at for the Qs would be the 30 RSI, which is going to be about right here, or the 200-day moving average, which is here, or the 250-day. Boy, it's been a long time since we got even close to the 200 or the 250-day. But sometimes it acts like a magnet. So I wouldn't be surprised. I would be very careful, everyone. I would not be surprised if it pulls it down to the 30 RSI or the 200 or the 250. What's the Russell doing today? Well, the Russell is right there at the 200. It's holding right at the 200. The Russell doesn't backtest well with the under 200, over 200, so I'm not going to be interested there. I don't think really I'm going to be interested in anything today. The only thing that I had my eye on a little bit was AGQ, but that I guess it's possible. And I will buy AGQ if it closes back over the 100 and it closes back over the 30. But looking at it right now, doesn't look like that's the case. Steve says NKLA chart destroyed. Down 24.13%. It did try to hold support at the 200, couldn't keep it. Yep, that's pretty nasty. That is pretty nasty. Evan says, what do you think of Chewy? Well, it's up today, Evan. That's a start. is up above the above the 50 RSI. I'm sorry, the 50-day moving average. Looks like it's already rejected the 50 RSI, so it's kind of right in the middle. It's rejected the 50. Let me test that real quick though to make sure. Yeah, it got above the 50 RSI and it's holding the 50-day moving average. So I don't think I would buy this here. I usually don't buy something if it's already rejected the 50-day moving average intraday, which it already has. But it's up today. That's good. Gary said, glad I never bought the Nike puts. Well, I would have hoped, Gary, that if you had bought them, you would have gotten out before earnings, right? Like we talked about. John, hey, how you doing, John? Nice to see you, my friend. Hope you're having a good day. Tom Basso went full hedges on today. I don't blame him. I don't blame him. Yeah, I like Tom Basso's post. Good trader. Steve says, I was stopped out of BABA at 272.74 for a 0.92% loss due to the 520 cross under. Yep. And that will be me as well, getting out of BABA here at the end of the day. A 0.92% loss seems like a gain on a day like today, doesn't it? Frank says, when the market goes down, cash as a position goes up. Excellent, Frank. Dr. Alexander Elder always taught me there's 3 valid positions in trading. There's long, there's short, and there's cash. And they're all equal. They're all valid. Oh, I'm glad I got out of Intel when I did. Holy smokes. All right, so I am going to follow Steve's lead, and I am also going to get out of BABA here and take about a 0.9 whatever loss. That's fine. Happy to do it. Okay, that one's out of there. And that one is out of there. Zynga, I am going to sell half of my position on Zynga because it rejected the 50-day move or the 50 RSI. You can see, did hit one profit target. Glad I took that off, but I will be getting out of half of my Zynga, what I have left. Okay. That's done there, and I have to do the math in my head. I didn't have a round number. Okay, so that's taken care of. Yeah. So Alibaba is gone. I will be buying SPY at the close. Zynga, I just got out, have half locked in profits there. Amazon still up on my puts, so it's a keeper. Apple have puts there, but they are still up slightly. Yeah, it looks like SPY is the only thing I'm going to be doing today. Apple's at 106.90. We very well might get down to that 100 level and test that $100 level. Somebody mentioned that the other day. I think it was Glenn maybe, and I think he was kind of prophetic with that because that very well might be the case. Is Google going to hold that 200? That's the key. Steve was stopped out of IBB for a 3.44 loss due to the 530 cross under. Okay. All right, we'll take that off for you, Steve. Wow, how things can change. Dow down 555 points at the moment. NASDAQ down 338, down 3%. For those of you in Google, 1404.22 is the 200. We're at 1406.90. 408. So it looks like it's holding that 200 day. I hope it holds, everybody. Oh, AGQ might do it. I don't know. I guess I'll get it queued up in case. Key thing here is position size. And again, if I do buy it, which it looks unlikely, but if I do buy it, if it closes over the 100 and closes over the 30 RSI, I would buy it. But it's just like any other trade, even with the double leverage, because I'm using the 2 ATR to position size, which is already taking into account the volatility. So hope that makes sense. And I do have my order to buy. Yeah, I have my order to buy the SPY. So I'm just going to be watching AGQ here. We have about 2.5 minutes. $40.42 is the 100. Frank says, I got to be 98% cash right now. Sounds like a good plan, Frank. Gary M says, Greg, I sold Goog this morning for a small gain. Oh, okay, good. All right, we'll take Gary off of there. Man, AGQ got brutalized. Almost 14%. 1 minute to go, everybody. Wait, I sold Bobber, right? Yes, I did. Okay. All right. So it looks like Apple's rallying a little bit into the close here. AGQ is also rallying. I don't think it's going to make it over though. No. So that's it. Okay. Wow, what a day. Dow Jones down 523 points, down 1.92%. NASDAQ down 330 points, down 3.02%. And the S&P down 78, down 2.37. All right, so Let me take a look over at my transactions, see where I bought SPY. 322.64. All right, I did get out of Alibaba. Steve also got out of Alibaba. All right. SPY. Man, am I thankful that was a gain on today like today. 322.64 is my new overnight SPY trade. Just like that. Zynga, again, I locked in half profits today on here with the rejection of the 50. And I'm really glad to see a bunch of you that were in silver and in gold have gotten out before this big down move. That's for sure. So listen, if you have any new entries or exits for me today, I'm sure there's going to be some. Go ahead, put them in the chat. I will get them all taken care of. Before I do that, just real quick, you know the routine. I just want to remind everybody I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I love to teach. I've had really good success with my clients. I think I teach a really good course. It is a 15-hour course, one-on-one course, 5 sessions, 3 hours for a total of 15 hours. In the course, I teach everything I've learned from my 24 years of experience of trading and also from my mentors and teachers, what they have taught me in one-on-one classes that I've had with them, like Stephen Burns, Dr. Alexander Elder, Kerry Lavorne, Larry Williams. In the course I teach, I incorporate everything I've learned from these gentlemen, and that's what I teach in the course. So it's very, it's an extensive course. It's pretty intense. But when you're done with it, you should be able to trade about whatever kind of market we have. I teach you how to put together a trading plan, adjusting for volatility, looking for strong areas of support, looking for, factoring in your emergency stops, end of day stops, intermediate term profit targets, ultimate profit targets, profit target levels, all the stuff you need. So if you're interested in taking the course with me, I think you'll love it. It is $1,000, but I think it's worth every penny. I think it's worth more than that. I think it's worth a lot more than that, to be honest with you. I think you're really going to get your money's worth. I try to under promise and over deliver. That's what I've always done in business, and that's what I do here. So if you're interested, reach out to me. You can send me an email. Email's in the description of this video. You can also send me a message on Twitter, and if you do reach out to me, I'll reply and say, hey, let's set up a Skype call, and let me know a little bit about you and your trading and your challenges and your goals. Then it's a good time for you to ask me questions about the course. I'll never ask you if you want to take the course. It's not a sales call. It's just an informational call. And when I'm done, I'll just say, hey, nice speaking with you. If you would like to do the course in the future, you know how to get a hold of me. You can just send me an email and get it set up. All right. So I don't want you to ever think there's going to be any sales pressure on that call. And then if you like today's podcast, I would appreciate it a lot if you would hit the thumbs up button. Helps to build the channel, helps to keep the channel around. And but if you did like the content, I'd appreciate it if you could take a half a second before you click out and hit the thumbs up. All right, so let me go back up here. Okay, so I know Steve got out of IBB with the cross under. Okay, we're out of IBB. I'll just go down the list here. Alibaba, I took Steve out of Alibaba. David got out of Twitter. I think I already marked that down. Yes. Gary said, I also sold credit spreads on Google. Okay, so we'll get Google over here. And I'll put in here Gary. He sold the November 20th puts and November 20th 1150 puts. So he did a credit spread there. So he has protection. He has 210 points protection to the downside. You know, I like selling puts when we've had a lot of volatility and we start getting down towards those strong support levels. Selling puts up here makes no sense to me because there's no volatility. You're already setting yourself up for a possible move down and you're not getting paid for the risk. Here, we've already covered a lot of move to the downside, which in a strange way, the way that I look at it, reduces your risk and you get a whole lot more premium for doing it down here. So that's how I look at selling puts. Kamal is out of VWM. David says Google held still in the trade. Oh, yep, good. Yep, it bounced right at the 200. William says, hello, my coworker 1 week new to stock trading, asking me quite a few questions. Who would be a good resource to refer her to? Learn about stock trading. Oh, good. Well, William, you know, let her know about my channel. I think it could help her. And another option would be, you know, direct her to my YouTube channel. I have a playlist there, William, with all sorts of lessons, and they're totally free. And I spend a lot of time on each, you know, type of setup that I use. So there's many lessons there. Like I said, it's totally free, and that might be a good place for her to start. And even better would be to watch those videos and then come to the live stream as well. But yeah, let her know if you don't mind, William. Thank you. Quad says, I'm out of Baba, still hanging on to Zanga, but did take some profit. Okay. All right, so that's Quad, Mr. Quad Racer. We got Quad out of there. Gary is out of Quad. Out of Baba. Evan JD. All right. Have Evan out of JD. Frank says, I'm out of DKNG. Yep, I imagined. You know, congratulations everybody for getting out of your positions when you're supposed to. TOL. Okay. And half my position. That seems smart. I think that's a smart way to play it, Frank. I mean, you're still profitable on the trade, which, you know, is a good sign, but it was down a lot today. Sold 1/2. I think that's, you know, I'm a huge fan of selling half. If you sell half, you're never disappointed, because if you sell half and it goes down, you're glad you sold half. If you sell half and it goes up, you're glad you still have half. You know, I had that big trade on Roku the other day, and I did sell half the day before it had the huge 15-16% up move, but that just kind of proves my point. You know, if I'd have sold it all, I would have been heartbroken that it went up, but I was still extremely happy even though I sold half. And if it had gone down, I'd be like, I'm glad I sold half higher. So I'm telling you, it's one of the very few things in the trading world that seems like a win-win is to sell half. You know, I tell that to people a lot. What should I do? Are you not sure what to do? Yeah, I'm really, you know, struggling and wondering what to do. My first response, because it's good advice, is if you don't know, sell half. All right, Johan is out of Baba. Yes, out of Twitter. What a day. See worse and better days. All right, nice trade there, Yas. Did hold the 70, so that's positive. Seen worse and better days. Dan says, William, this YouTube channel has great free video lessons. If cost allows, Greg gives private lessons. Yes, I do. Everything I teach in my private lessons are in those videos for free. But it's always better to have a teacher that you can ask questions to. But if cost doesn't allow for a private lesson, then please watch the free videos, or have your friend watch the free videos. William, Steve Burns has great books on Amazon. That is also true. That would be a great recommendation, Dan, to read any of Steve Burns' books that he has up on Amazon. Moving Averages 101 is my favorite and would be a good one to start with. Dan says, agree with Dan. Greg has great videos and teaches for free every day. One-to-one with him will really change how you trade. Thank you, David. I appreciate that, my friend. Thanks for the kind words. Dan says, Greg, funny how my phone autocorrect sneaks in improper English. Oh, so you're speaking into it and it does it automatically. Netflix. Glenn is out of Netflix. Okay, Glenn. Okay, so I have Brian and Johan still in Twitter. I have Glenn and Andrea still in Baba. Intel, I did get out of Intel today at break even on my puts. Google, Gary sold credit spreads. I still have Steve Burns and David in Google because it held above. PD, Kamal, I still have. VMW. Let me see, who do I have here? Johan. Okay, so I think Johan still has VMW. PayPal, I show Brian and Glenn. JD, I show Kamal. FCFS, I still have Bob in here. GDXJ, I still have Yas. Twitter, we already talked about. Haven't heard from Carol, so I'm gonna. Glenn is out of PayPal and Baba. Okay. That's Glenn, right? Yeah, that's Glenn. Okay. Well, what's happening in the after hours world? Apple's down 2 cents. Amazon's down $4. SPY is up 50 cents. Hey, that's good. Man, gold. What did regular gold do today? Down 2.16%. And silver down 7%. Wow. What a move down. Well, the board just got a lot smaller, which is good. All right, is there anything else I can help anybody with? Are there any questions I can answer? If there are, please let me know. It's always tough to have days like today, but again, it is part of trading, everybody, and you've got to take the good with the bad. And I'm just glad to see a lot of you just getting out of these positions when they're going against you and they turn into a loss. It might go roaring back up tomorrow. I understand that's always frustrating, but it might go roaring down tomorrow as well. But you can't control the market. You can't control what it does. You kind of have to sit there and just watch what it does. But again, the only thing you do have control over is when you buy something or when you sell something and how many shares you buy. Those are the only thing you have control of. So make sure you make good use of them, and also make sure you make good use of patience. Patience is the number one advantage that we have over the large financial institutions. They have to buy, they have to sell all the time because of order flow. Our advantage as small retail traders is being able to sit back, wait for that perfect pitch to come across the plate, right? So always remember the number one advantage you have is patience, waiting for a really good setup with strong support below you, so that if you're wrong, you're wrong, and you're wrong small. And then if it goes up, having the courage to hang in there as long as it's doing well. And then, obviously look and see how it's reacting around levels above you. And again, when you buy it and how many shares you buy, that's the only thing you have control of. So please remember that. The rest, we're just watching from the sidelines. Frank says, I swear, as the days grow short, we should heed the signal and short the market. Yeah. Yep. Gary says, thank you very much, Greg. Have a great day, everyone. You too, Gary. Gary says, I agree, Frank. I have some hedges in place. Good. All right, everybody. Well, listen, thank you for coming today. Appreciate you spending your time here. I hope you have a good rest of your day. Please go out, as always, do something nice for somebody today. Just one small, nice, kind gesture, help them out. Just something, and hopefully someday somebody will do a nice little favor for you, or a nice gesture for you when you need it. And then if you could also go out and do something nice for an animal today, that would be fantastic. That would be twice as good. Just give them a little pet, take them on a little walk, give them a little treat, give them a little scratch or a rub or a scrub, whatever it is. They're living beings with feelings just like us, and so they would appreciate that as well. So tomorrow's a new day. Could be a whole different type of market. We shall see, but I appreciate everybody coming today. I'm going to head up in the mountains. It's a beautiful day. Take a little hike, and I hope to see everybody tomorrow. So have a good rest of your day. Be good, be safe, and talk to you tomorrow. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity.